So I think we can kick things off. We've got a great trio here. I'm super excited. My name is Frank Chaparro at The Block. I am the news director there, where I am digging into all things crypto, market structure, and trading. And we're really lucky today because we have two great luminaries of the cryptocurrency market. We have Peter Smith, the CEO of blockchain.com. They run many different businesses. They're best known for their crypto wallet business, and they also run an exchange and do lending and a few other things. So Peter, thanks for joining us. And then Catherine Coley, she is the fearless leader of Binance US, which is a partner firm of the very, very large market player Binance. She has a interesting background in FX, which might come into the story later. And we have, I think, does that show we have quite a good amount of folks watching? That's great. So we're going to be talking about Bitcoin in light of this ongoing health and financial crisis. You guys are glued to crypto Twitter. I don't know if I'd say just as much as me because I have a problem, but definitely glued to it. And you see the debates, you see the ongoing conversations about whether or not Bitcoin is this correlated asset to the S&P, given how it's been moving over the course of the past, let's call it month and a half, since that March 12, 13 mega sell-off. For people who don't know, in almost 24 hours, this thing sold off $3,000. But let's start with that conversation about this question of, is it not proving itself to be that safe haven, hedge, digital gold equivalent? Let's start with your take, Peter.
Yeah, so I want to push back on your Twitter addiction comment. I don't even have Twitter on my phone, so I'm significantly less addicted to Twitter than you are, Frank. Well,
you're always messaging me about Larry's takedowns of me, so I think that's where the.
Oh, I've got a scraper for that.
There's an alert.
All Larry Frank tweets.
Yeah,
I don't want to.
That's the difference. That's the difference. But anyway, go ahead.
I'm open to starting a blog as my next startup that just monitors the Frank and Larry rivalry. I think the world needs that product.
Yeah. Larry is my colleague at The Block. Yeah.
It could possibly be the next Bert and Ernie. I'm appreciative of this.
I hope that I'm Bert. Okay.
No, you're Ernie.
Okay, fair enough. All right, go ahead, dive right in.
So listen, I think what we are seeing in our we run a consumer business, there's a wallet business, and then we run an exchange and a sort of an institutional trading desk, like almost a, what at Goldman would be called like their trading and investments division. And, that business is pretty interesting because it sees a lot of interesting sort of macro flow because we do trade FX as well as crypto. And basically what we saw in the big market move was essentially every major counterparty selling everything that could be sold. So it really didn't matter what it was that was being sold. It was just, sell everything that isn't nailed to the wall. And so traders, execution traders at funds and, other counterparties were just getting a mandate to sell literally anything that could be sold. What happened from there was pretty scary. We got below some key price levels in the Bitcoin market, which triggered a cascading wave of liquidations. There's a ton of leverage in the system, thanks to companies like BitMEX, companies like Binance.com, other Binance. I don't know how we should refer to the two, but other Binance.
Binance.com is fine.
Binance.com. So other Binance.com, which runs a big leverage market. And there's just generally a ton of leverage in the ecosystem. A big source of leverage in the ecosystem that people don't know about is loans to miners. So miners borrow dollars against Bitcoin holdings. And when those get below a certain liquidation threshold, you start liquidating. And so what happened is the market was under a ton of liquidation pressure from the futures products like BitMEX and the other exchanges, but also from the OTC market from these loans against sort of miners being liquidated as well. And so the market just couldn't withstand that kind of liquidation pressure. And you saw an extreme move down to 3,900 really rapidly, which wiped a lot of people out. A lot of individual traders, a lot of trading firms went bust on that move. It was pretty scary day.
But thinking about how Bitcoin has performed since that breakdown in the market, Catherine, have you been surprised or maybe not surprised about how much in lockstep Bitcoin has been with broader markets? And does it need a breakout? I'm going to hit you with two questions. Does it need a breakout to sort of maintain that narrative that this is a special, uncorrelated digital gold?
Yeah, I think some of the components that are what make Bitcoin quite attractive were not jeopardized in this price action. So we have to think about the components that really still hold up, which are the self-sovereignty, the ability to access this digitally, the ability to send this, asset quickly through technology. It really lets us say nothing of that was compromised, and therefore it still has served its purpose, and it still can serve its purpose. And we see since the drop down, actually, Bitcoin became quite affordable for those that were naysayers on the run up to 10K and on the run up or in between. And so I think we actually saw a big resurgence of institutional buyers come through because this was an opportunity for them to actually get in to Bitcoin at a more favorable valuation than they would have seen, say, buying it up at 9 or 14,000. So for us, we saw kind of eyes on this as a new opportunity for those that felt like they had missed the opportunity to get into Bitcoin. Now go, okay, well, still, jury's still out where it's going to be in a year or 10 years, but now it's at least a more affordable level for me to get in. So we saw a big pickup in app downloads and the ability to trade instantly through our, buy, sell, instant button on our app. And that was kind of something that was just compelling. You saw more people wanting to get exposure to these markets. And one of the beautiful things about crypto markets is you can access them after hours, quote unquote, with the S&P being, still quite distant or restricted for some folks.
Yeah, there's definitely no doubt about the fact that this has been a very strong moment for those folks sitting in the middle of investors, exchanges, trading firms, making money hand over fist, and almost makes us harken back to the days of 2017. But let's even go back further. Peter, you've been involved in the market for a very long time, right? And when we think about what Bitcoin was born out of, this almost revolt against that 2008 financial crisis, many people I talk to think that we needed, unfortunate that crises happen, especially health and financial crises, but you needed that shoe to drop to show the value prop of Bitcoin, in as much as you see the Fed printing all of this money at a almost unbridled clip. That, in a sense, reveals some of the positive aspects of Bitcoin's monetary policy. When you talk to folks who are maybe coming in new to the market, is that resonating with them, this idea that, all right, Bitcoin's actually, and now we can see it more clearly, perhaps, a sort of twist on the system?
Yeah, I think that what's going to matter, and you've seen this actually in other crises, like in the GFC, gold initially traded down pretty hard. So it's not unusual for liquid assets to trade down sort of regardless of correlation. I think what's important for crypto over the next year in the greater macro context is that it behaves the way it's supposed to. And if it doesn't behave the way it's supposed to, I think it's telling us something super important, which may be that the mental model that we've tried to apply to it is not the right one, right? So I've been in crypto long enough to remember when it was not digital gold, which is something that we've kind of like written over politically inside the crypto space. Originally, crypto was about a better cash, not a better store of value. I'm actually still a big believer that the whole idea of crypto is to build a better alternative financial system for the internet. I think that the point of Bitcoin at this point, it's been politically decided, is to be a digital gold because of who's in control of the community around Bitcoin. But I think that the point of crypto as a whole is to build a better financial system that lives on the internet. And so for me, I think that this next year and a half is going to be a big test of Bitcoin for all the reasons that you outlined in the Bitcoin thesis. But I don't think that the rest of the crypto system is defined by just the biggest asset in the crypto system. And so that's where I think we have to be careful to recognize the difference there. Like in our case, at blockchain, we focus, at least as much effort on the alternative financial system for the internet mission as we do the store of value digital gold mission. Actually, probably more. We spend more time on the alternative financial system for the internet. While, as you correctly noted, we make a lot of money in market conditions like this.
Mm-hmm. No, I think it's an interesting point. The way Bitcoin, and for viewers who are maybe not as plugged into the market, how we understand it, how we understand the value proposition of it has changed and will likely continue to change. But when we think about, you describe what it needs to do, or what it's expected to do now, maybe the next year. What we could potentially see is a paradigm shift in many different ways that we act, and I think the way we think about money in particular. That paradigm shift could benefit Bitcoin. It could, we have China building out a digital dollar. We have digital dollar initiatives here. Catherine, you're often you're very plugged into the stablecoin world. Maybe Libra wins out of that paradigm shift. It's not just Bitcoin, right? Bitcoin's super important, but there are all these other things going on. Let's think about stablecoins and maybe Facebook's Libra, because many people are aware of that. Does this crisis maybe add value to the idea of stablecoins, the concept of stablecoins?
It doesn't. It doesn't. It kind of offers the opportunity to realize there's an alternative digital asset for something that is less volatile. But the counter to that is it is pegged to the US dollar, which is, as we know, being printed, in faster fashion than we've ever seen. So where you're having something stable, it's really not stable in the price. Your purchasing power is decreasing with it. So I think that there's a benefit to having something where you can kind of go on the sidelines, as I call it, when you're trading, and not be able to move all the way back into fiat, which can oftentimes slow down your ability to get back into the markets. But that's kind of just a kind of the side of the road when you're trying to pull over versus go off the exit ramp. So I think
actually we've stablecoin name.
Yeah, go ahead.
I hate the stablecoin name. I always have. It really bothers me. I tried for a while when they first started coming out to get everyone to agree to call them fiat coins.
Yeah.
But people didn't like that idea.
Well, I want to get away from the word fiat, because we never use the word fiat on a trading floor in FX to save our lives. It's just currencies.
Currency coins.
Currency coin. I mean, I truly think we could come up with a better name, because stable is not an accurate representation. But it is more stable than highly volatile.
Crypto are really good at product marketing and naming things.
Well, I think
NFTs.
You make a good point. It's relative. It's relative to Bitcoin. They're stable relative to the big swings that we see.
Are they though? Because fiat currency has been going stably down for the last 8 years, and Bitcoin's been going stably up. So
$1 is still $1. And
but my cheeseburger is now 12.
No, but it's an interesting point, and I think it's part of why so many people are drawn to this market, right? There is that value that you're alluding to. When you look back on what we've seen in this market, how are crypto firms like blockchain.com and Binance US getting through the crisis? What's it been like? Do you think crypto firms are in a particularly risky bucket in terms of weathering the storm?
Catherine, I'll let you go first.
Not particularly. I think we're focused more now on simplifying our product, being able to make sure that this actually serves the purpose that we need in times of crisis. So the ability to get funds quickly into the market, quickly out of the market, the ability for this to be understood by more users than just those that have been following crypto Twitter. A large portion of our users, I'm sure, don't even have Twitter. So it's confusing to them why we even use it as a bugle. But that's kind of really what we're focused on, is making sure that this product can serve as a liaison to folks that want to digitize their wealth or create wealth from a digital atmosphere, rather than go through the banking sector that they are more familiar with. But in terms of our day in, day out, everything's very much the same in terms of how much we have to work and get done in order to keep something that's 24/7 operational. But I think we were almost prepared. I hate to say we were slightly prepared. Binance US, one of our team members had the chicken pox a little like 4 or 5 months ago, and so we've been through the full sanitation of the office before, everyone go quarantine, make sure to test your symptoms. So we had a bit of a test trial with that with someone with chicken pox, but I say that lightly, and then I realized that it actually did prepare our team quite well for being able to go into an emergency setting.
What's it look like at blockchain.com?
So we started out 100% remote, and then built offices, which are kind of like hubs, but we always have had about 20 to 30% of the staff remote anyway. So it's very unusual to not have someone dialed in. So we have all the infrastructure to make sort of remote decentralized work possible. So it really wasn't a change in operating for us at all. I think the other thing is that we do a lot of business in China, in Asia generally, and our investors in companies there. And so because of that, we sort of started to see these portfolio companies mitigate impact in January. And so we had, probably 6 weeks, extra time to prepare our staff and, do the kind of business readiness stuff that is prudent to do. So it hasn't been a huge deal for us. I think if anything, productivity has probably gone up, just because no one has anything else to do.
Yeah, and I think it's funny. I think the fact that we have so much free time, and we're not going out to sporting events, we're not going to bars.
I wish I had your life. What is this free time you talk about?
Well, no, in terms of
I didn't do any of this stuff anyway. So.
I don't get shamed for working this hard, but
I mean, we as in the masses.
We as in the Franks. I get it.
I'll include myself in the masses, but now what do? We pay attention to markets. Maybe we explore a new language or explore a new way of thinking about money. When you think about, there's definitely a retail aspect to that. People who are taking up trading for the first time, maybe taking up cryptocurrency trading for the first time. But I'd like to focus in on the institutional aspect for a second. I was having a conversation just right before this panel with the firm GSR. I'm sure you guys have heard of it.
Yeah, Chris.
Yeah. I was talking with Rich, and we were thinking back at 2017 and how the derivatives markets. You guys know this better than anyone. They've really exploded in crypto over the past year. We talked about those leverage products, and I remember, if you think about 2017, the derivatives everyone was talking about were Goldman's NFD that they were doing, and Citi was building something, and Morgan Stanley Citi had a digital asset receipt, which was supposed to be similar to those ADRs that I'm sure Coley knows so much about. But when we think about those firms, which the average casual observer of the market knows about, they're not in crypto, even as excited as we were for them to dip their toes in. What's holding them back in your view? And do you think that this crisis could change that? Could maybe expedite their entrance, or maybe do the exact opposite?
I think it'll do the exact opposite. I mean, we deal with a lot of these institutions on the FX side. We have a lot of that, like FX flow that we have to deal with, and they are not really well set up to work from home, and so I think bank productivity is going to be pretty slow, and getting any risky big decision done is going to be pretty difficult. And so starting a crypto business inside a Goldman or a JP right now is going to be next to impossible. The only thing that could happen potentially is like, if the market rips to 50 to 100K, they FOMO real hard and try to figure it out, or make an acquisition. But I think it's going to make it harder for sure.
Yeah, the other thing that we have to factor in is these unusual market conditions are also what macro thinkers live for. And so for them to sacrifice any bit of research time on a new topic or a new asset class, when you've got this much interesting injection of capital into these markets, they're equally finding opportunities within equities and within FX for them that just keeps them up at night, excited for it. So we almost need kind of a low vol market for the banks and the institutional types to get antsy and want to participate in something that could have a little bit more activity taking place. But right now, where we see activity taking place across all fronts and uncertainty abound, it is still a candy for most of those big players.
Yeah, especially the trading shops, and we've seen reports of some trading firms that had been making markets or providing liquidity in crypto kind of shut the machines off, or at least retreat a bit, because you have Apple moving up and down 5% every day and insane bouts of volatility across bonds and equities. And I think Peter, you raise a good point about the fact that they need to put their attention on the house first before you can start diverting resources to magic internet money. But thinking about coming out of this crisis, when sort of the dust settles, could that change?
Look, I mean, so I've been doing this.
Or does it not matter? I mean, maybe,
7-8 years now, and feels like a long time. And
it is.
And I've been answering this question for 6 or 7 years. And that probably tells you all you need to know, right? Which is like, it's probably not going to happen anytime soon, and it probably doesn't matter. Like, the thing is that, you don't really need Goldman in the party to build a new financial system for the internet. Like, it's interesting to folks like you because it's good news and it's good click fodder. No offense, but
clicks are important.
But they're not important.
They don't keep you warm at night in quarantine.
The bankers aren't important necessarily.
The bankers are important, but Frank's clicks are.
Clicks are very important.
I feel you, buddy.
As are subscriptions to the block.
All right.
Smash the sub button.
Everybody gets their one plug. Everyone gets their plugs abound. No, it's an important point. I hope that the market, there you go. I think the market is finally actually coming around to that perspective. Casual observers of the market, when they think about crypto, they think of it happening in phases. 2017 was the ICO phase. 2018 maybe was the STO phase. Then we saw the DeFi sort of time in the sun come in. What are some of the trends or hype cycles that you guys are seeing or anticipate?
We're seeing kind of a simplification of access, which I think is going to be something that comes out of this crisis, with people being more aware of it, that the access to crypto no longer is as difficult as it once was. The access to learning about crypto is no longer as difficult as it once was. You look at the interfaces of Cash App and how you can buy Bitcoin within like 5 clicks. We've really brought it down to a far more understandable level. And I think that comes with the question of, does that still make it appetizing for people? Or are we missing the mark on giving people that awareness of the risk management that's really required for stepping into new markets? So I think that's something that we're observing, is just the simplicity that we're going to try and communicate this crypto industry, to strip out all of the jargon, take things down to a level where people can actually understand that this is a monetary system that does not need to print anymore. This is a fixed amount of coins, and this is mathematically based. Like using smaller words like that rather than miners and GPUs and complex kind of concepts that other folks outside of our industry were not aware of. So, if anything, looking inward and saying, how hard have we been able to define what we do in everyday terms and come across that a little bit better?
Well, it goes back to Peter's point about needing a sort of marketing 101.
Could really use it. Could do a nice like full caucus, all crypto participants, raise your hand if you think non-fungible tokens is something that really makes sense, or should we have it as digital collectibles? Yeah. Stable coins or digital dollars. I think that's, it's not too late to try and do that. But it certainly made regular finance more and more difficult as years went by, that you had, odd nomenclature, to use a big word, to describe certain things. I still think of it today with NDFs, and if I riddle my life about FX, it's just 4-letter acronyms. And that's what you did to protect your job and keep people out. And, it's a fast moving world, so you needed to use short phrases. But in crypto, if we expect this to be broader adopted or more useful in the homes and online on your phones by a larger audience, we definitely need to open those kind of language doors.
Yeah, I agree. It's pretty challenging right now on the product marketing front. Another thing that doesn't help is different platforms call the same thing different things, which there's a lot of in crypto. I've been part of some efforts to come to common consensus in crypto, and those have usually gone pretty terribly. So I'm not hopeful on that front, but can dream, can hope.
Maybe that's what we replace these crypto conferences with, is a forum of discourse around some of the things that we're doing.
Peter, what's the one thing we're going to agree upon after this of a name change that you and I can both start the trend?
Yeah, that's a good idea.
Between Binance and us, I think that between the two firms, we're 100 million page views a month. We could probably change what people call stable coins unilaterally. Yeah. Because the only other big source of traffic, the 5 big sources of traffic in crypto, so people with more than 50 mil page views, are BitMEX, Blockchain, CoinMarketCap, Binance, and Coinbase. Coinbase doesn't really do stable coins. They just do USDC. So they're not really part of this. BitMEX doesn't do stable coins. So it's really just Binance, CoinMarketCap, and Blockchain. You guys bought CoinMarketCap. So we could probably just agree to sort this stablecoin thing out.
What do we want to call it? What do people want us to call it? Anyone else online that has a suggestion?
Yeah, I don't know.
Digital dollars.
Digital dollars. Fiat coins.
Quick with the fiat.
Crypto dollars.
The only way I knew fiat was at Fiat Lux, and then I had to remember what it meant.
There's still cryptocurrencies in a sense.
I don't mind fiat coin as a term. I don't feel strongly about any term. I think the problem with digital dollars is that eventually
Sarah Maxwell says digital dollars.
I want to live in a world where there's 70 stable coins.
Do you think every company will have their own stable coin?
No, I think that's a dumb trend that's going on in the industry.
I like that. Let's get controversial.
No, so for example, Catherine's company, Binance, has their own stablecoin.
USD.
Yeah, which is a PAX branded coin, right? We have our own, which is also a PAX branded coin. The two are interoperable. They're also interoperable with PAX because it's all the same thing. But customers probably don't know that because we call them 3 different things, which is dumb in my view. There's reasons to do it, which is clearly why we did it. Clearly,
We have a question. No, I love that.
Probably not helpful.
I love that topic because it speaks to the simplicity topic Catherine's talking about. We have a good question from the audience, Diane Amos. Do you guys think that stable coins may shake out eventually? Instead of having the Peter Smith Paxos-based coin and the Catherine Coley one, we're going to get to a point where Paxos would probably like us all to use Paxos or Pax, but will there be one fixed coin, as Earl Aspermatis puts it?
So here's the challenge as I look at it. The challenge is that our customers don't know who Paxos is. So for our customers to really believe in a stable coin, we have to put our brand behind it. And we can do that by calling it our stable coin, or we can do it by recommending a stable coin. Now, there's not a lot of like economic incentive for us to like do that for Pax, right? Particularly, when we don't know what's going to happen with Pax long term. So for example, if we were truly wanting to just simplify things and do things in the best interest of customers, like we would probably get together with Binance and say, hey, let's both lend our brand to, this. You don't make money with stable coins other than on trading fees. So like conceptually, Binance and us could get together and be like,
BUSD has a nice ring to it. It already has the B for blockchain.
Sure. And endorse one of these and define a standard, or just even define an open standard, right? And that would probably help customers a lot. Mm-hmm. But in crypto, we're not really good at doing those things. And so you end up with these sort of half measures, which is, and I picked the stablecoin illustration because like it's an easy one to pick on because we both did the same thing, literally. Mm-hmm. But we never as far as I'm aware, and a lot of things happen on blockchain that I'm not aware of nowadays. But as far as I'm aware, we've never made an attempt to like coordinate a standard with Binance on stablecoins, even though like we probably should have, right?
Well,
so call you after this.
We'll see what happens. Give us the scoop if that ever comes to fruition.
That would be news, Frank. If Binance blockchain agree on a standard for anything,
that would be
wouldn't it be terrible? You think about when the Hong Kong dollars were distributed, each bank had their own print. So one bank had 2 lions, one bank had the Bank of China building, and they were only fungible, very similar to the Scottish dollar or pound when it first came out as well. And there's a endearment to seeing each bank have their own currency, but it also is accepted now everywhere. So I think we'll get to a point where hopefully we can have kind of fungible versions of stable coins that make sense. It's just I'm going to clearly purchase my stable coins from the same provider that is providing me my Bitcoin or my wallet's held, and it happens to give you, as you said, like that confidence in what's happening or what's behind there based on the organization that's just
arguably though it'd be like great for customers' general confidence in the crypto space if if they when they buy something a digital dollar from Binance, they know, and it is interoperable with digital dollars at blockchain, that they know that, right? And that, and vice versa, in both directions, because it's it is like a bit of we did miss a bit of an opportunity on that front. I have one question for Frank and for Catherine, and we're running out of time here, so I wanted to get my one shot in.
Oh dear, I'm nervous.
What do you think is more likely in the next 12 months? $4,000 Bitcoin or $40,000 Bitcoin?
In the next 4 months?
No, in the next 12 months. What's more likely? That you can buy a Bitcoin for $4,000 or that you can sell a Bitcoin for $40,000?
I'm going to have to go with the former on that one.
Which one is that?
Don't use hard words.
I don't think I think 4,000 is more likely if you look at the broader macro picture of the fact that the fact that we could see further shutdowns, a resurgence of this virus. There's so much uncertainty hanging over every corner of this market. I am bullish long term. I called the March 23rd market bottom in our Frank called the bottom trading group chat at the block, but I don't know. I don't know about next 12 months. Maybe
no.
we'll see 40,000 in the next 6 months.
I'll take the opposite. I'll say 40,000. I think we've got extreme amounts of uncertainty as well that are still stirring the markets. People are still at home. There's a little bit more confidence in what's going to be happening in Bitcoin. We've got the halving coming up. We've got a prior focus for us, so a chance to learn and become more crypto literate in the next 12 months, and a purpose to do so. Bitcoin's not going anywhere, and so I think that's where we'll see it, heading all the way up to 40,000.
And we shall see. Well, this was a great conversation. Ladies and gentlemen joining us, thank you for joining us, and thank you to Peter Smith of blockchain.com and Catherine Coley of Binance US. Stay groovy, everyone. Thank you. Frank Chaparro. Yep. Thank you, Evan Fang. Appreciate it.
Thanks, guys. Ciao.